Hey guys, so in today's video, I wanted to talk to you about this absolutely beautiful ICT Judas swing trade that netted us a 1 to 2 risk to reward this morning that not only myself, but also all of the members in the Discord community took with me. And we were able to take this trade down to the Asia lows and net a profitable 1 to 2 risk to reward. Now, we didn't exactly get a full 1 to 2 risk to reward because at one point I did tell everyone I'm taking 50% off and then go and break even. And once I done that, price did come back right here, as we can see, took us out of break even and then continued its descent lower. However, that's besides the fact. Let's jump straight into the trade analysis and see exactly why this trade played out the way it did. So let me remove everything from the charts, and the first thing that I want to talk about is actually the correlation between EU and GU. So this morning when I came onto the charts, the first thing that I saw was that we actually took out the Asia highs right there. And after we took out the highs, we had a rapid drop taking out the Asia lows. Therefore, because we now know that EU and GU are correlated, we know that GU is soon to follow its descent lower, just like EU. Therefore, when I saw the Asia highs getting swept, I knew that this was going to be a good trade because GU usually follows in the footsteps of EU. So that's just a little bit of correlation that I wanted to bring to you guys' attention, because it's something that I try and use frequently in my trading to see exactly where one pair is going in correlation to the other. But let's jump straight into the analysis. So the first thing that we have to do is actually jump onto our Judas swing framework. Again, if you haven't done so already, jump down in the description and download this for completely free. I have made it so you guys can follow along and trade with me. And whilst you're down there, don't forget to leave a like, comment and subscribe. But the first thing that we do is actually identify our directional bias. So if we jump up onto the 15 minutes, what we can start to identify, if I replay price to bring it right here, what we can start to identify is that we are actually bullish, right? So yesterday in the VIP updates, I posted this on EU and then I posted this on GU. So my anticipation was that we was going to come into this hourly zone and then we was going to get a bullish move up. So on GU we came down into this hourly zone and then we got this bullish push up. So technically we are bullish because we're creating a series of higher highs and higher lows. Therefore my anticipation was that we would put in this higher high and then we would get this higher low, and this is what we would capitalize on by taking the sells. So that was my anticipation. I know we are bullish. However, following expectational order flow, we know that after a higher high, we tend to see a higher low. So if I now jump onto the 1 minute and we go back to our framework, we've identified our directional bias, and our next step is to understand that the Judas swing happens between 7 AM and 9 AM UK time. So make sure that you change this according to whatever time zone you're in so that you also get the correct trading window. But once we've identified that, we move on to the next step, which is to identify our liquidity. So we mark out the Asia high and low because this is now going to become our liquidity. So between midnight and 7 AM UK time is what I classify as the Asia liquidity. And this is the points that I reference for the highs and the lows. So after we mark this out, we simply just wait and we wait until we get a sweep of either the high or the low in accordance with our directional bias. So let's play price on until it gets to 7 AM, which is right here. And then this will now become our Asia highs and our Asia lows are sat right there. So now we've got our Asia highs and lows. We know that our expectational order flow is telling us that we should see a higher low after a higher high. So again, if I play price on, we now sweep the Asia highs. Therefore, on the 15 minute, we've just put in a higher high. Therefore, because our expectational order flow is telling us to put in a higher low, we can now start to identify the next step in the framework, which is a market structure shift. So once we drop down to the 1 minute, we now wait for a market structure shift to occur. So we identify a market structure shift by simply following market structure. So again, if I play price on, what we can slowly start to identify is this is how structure is looking. We're again getting a series of bullish higher highs and higher lows. So let me play price on again and see where that takes us. So there we go. We've now again got the higher high right here. And now this is our higher low, and that is our most prominent structure level. If this structure level was to break, that would mean that we have now shifted structure in the opposing direction, because instead of giving bullish price action, we would be changing to bearish price action. So as we can see right here, we've gone from putting in higher highs, higher lows, higher highs, to now putting in a lower low. Therefore, expectational order flow tells us that we should see a lower high before a continuation lower. Now, that is how we identify a market structure shift. And once we've identified our market structure shift, our next step is to identify a fair value gap, because a fair value gap is where we have exponential price displacement to one side. Now, this is also going to become our entry. So in this instance, if we take a look at the charts, we can see that right here we've got this bearish fair value gap, and now this is going to be becoming our entry point. So once we've identified our fair value gap, we simply put our entry at the beginning. Our stops go above the most local high or low, and we always target the opposing liquidity. So if we took shorts from the sweep of the Asia high, we target the Asia lows. So now that we've identified all of this, we simply take our short position tool and we put it at the entry of the fair value gap with our stops just above the high, and we always target the opposing liquidity. So this is how the trade was marked up in my instance, and this is what was also sent into the Discord this morning. And again, if I play price on, we can see that price goes down, takes its time, comes back up, tags us in like this, and then we get a steady drop and a steady flow straight down to our take profit level. So if I just come onto the 5 minutes to speed up the process, because it does play around for a while, and once price starts playing around for a while, I actually tell everyone that I'm taking 50% off of this GU trade and to go break even, and we get taken out of break even, and then the stop loss also gets hit. So this was a beautiful 1 to 2 risk to reward trade that not only myself but everyone in the Discord was actually able to capitalize on today. So if you guys did find value in today's video, please don't forget to leave a like, comment and subscribe, and I'll see you guys in the next video.